in here. So thanks everybody
Okay.
for joining today. Today we're going to talk about long-term care. We have Samantha Katchen with us today. This is a person we've been working with for a while now in regards to our clients as far as helping them out with the long-term care needs. Our goal today is to try and cover, kind of what is long-term care, who might need it. There's a lot of misconceptions around long-term care, the benefits of planning ahead, and possibly talk about some real world scenarios. But let's kind of dive into like what actually is long-term care. So I've been, in the industry for 20 some odd years, and typically when I talk to people about long-term care, they come up with the solution. They'll talk about it's nursing home insurance. It's nursing home insurance, which it's not. Can you give us a kind of a broad definition or kind of what you see the field of long-term care being, Sam?
Yeah, absolutely. So long-term care planning is a critical component of risk management and retirement planning. It's actually considered the most overlooked aspect of insurance and financial planning in America, yet a long-term care event and the associated expenses pose the greatest risk to one's financial security. So long-term care, or otherwise known as extended care, is assistance that a person needs because he or she has a long-term impairment. So this could include like rehabilitative care, care at home, skilled nursing care, assisted living, and nursing home care. But long-term care insurance is what can help cover the cost of an extended care or a long-term care event. And likely this becomes a greater risk later in your retirement years. However, it's crucial to plan ahead, as I'm going to talk about a little bit later. But I think the first and most important thing to understand is why someone would need long-term care insurance coverage.
Well, that's awesome. So wait, if I hear you correctly, long-term care is not just for nursing homes.
Correct. Absolutely. Yes.
That's one of the ones that.
And that's where.
Yeah, go ahead. I'm sorry.
Yeah. Oh, yeah. I was just going to say that's what a lot of people think. And then cognitive dissonance kind of comes into play. Like you hear the word nursing home and then you completely shut down. But long-term care is much more than just a nursing home. It's not an event. It's not a place or a condition. It's a life-changing, life-altering event that can happen to you or one of your loved ones.
Yeah. And I've seen too, just to kind of add to that, like even not necessarily like long ones, but even short term. So a lot of times I'll see in our practice, somebody goes out, thinks they're in their 20s and they're in their 70s and they're shoveling the driveway. All of a sudden they
Yep.
slip, they break their hip or their leg, and they're laid up for 5-6 months. Is that something that would be encompassed in that kind of definition that you're talking about?
Absolutely. 100%. It would be. Yep. So it's not that extreme that we think of, Alzheimer's, dementia, like that most certainly would tie in with long-term care, but it can be on a much shorter, much smaller scale, just with technology, people are living longer and longer. And the older we get, there are frailties that come to our body with living a long life. So it may not be this extreme event where, we think about the worst case scenario, just laying in a nursing home. It most certainly could be what you explained, just with age, you fall, you slip on some ice, and then you need, it takes your body longer to recover. You may need some more care at home. You may need some extra assistance. Like I said, just those frailties that come with living a long life is where long-term care ties into.
Awesome. And then kind of on that same kind of idea or talk track, as regards to planning for it or caring for it, every now and then I'll hear, you know what, just before I go into a nursing home, I'm just going to give all my money to my children. I'm just going to give everything away. Is that a great idea?
I wish it worked like that. I wish you could do that, but no, it's not a good idea, and it won't work like that. They do have look back periods where they will look and see, like if you do go into a nursing home, you have to report what assets you have, and they are going to like look back 5 years. There's only so much a year you can gift your kids, so that is most certainly not a solution that will work when push comes to shove. So.
Well, let me ask you this then too, because I'll hear this every now and then. I'm trying to kind of get into some misconceptions, but you know what? I don't
Yeah.
need to worry about it because Medicare is going to cover it for me. I just run through Medicare.
Yeah. So, and I actually kind of have a little list here of bullet points of some of the misconceptions I hear a lot, and that is number one on my list. It's covered by Medicare. And that is 100% true, not true. It is 100% not true. Medicare does not cover any long-term care. So for people that are younger and not quite yet on Medicare, you do not want to account for any coverage within Medicare for long-term care. And for those of you that are on Medicare, you likely have a Medicare and You handbook that you get every year. If you flip to pages 55 and 56 in big bold letters, it says Medicare does not cover any long-term care. So that is something that is most certainly not covered by Medicare.
What are some of the other kind of, you said I hit the number one. What's the number 2 misconception or number 3 misconception?
Yeah. Absolutely. Yeah. So another misconception is that it's too expensive. A lot of times people will just completely shut down the conversation and say, you know what, I'm not interested in long-term care. I heard it's too expensive. And that's not necessarily true. There are many types of long-term care programs and solutions available. So I wouldn't use that blanket statement of it's too expensive, because it doesn't have to be. It can be customized to your specific needs and what you want to accomplish. And I explain it a lot of times to people like a balancing scale, right? You can get a very expensive long-term care policy if you want to. If you want to have a big loaded policy, you can most certainly pay a high premium for that. But it's a matter of this balancing scale with how much you feel comfortable in premium and how much you feel comfortable in benefit, and finding that balance of something that feels comfortable to you, because having something is better than having nothing at all. And I am a huge proponent of saying that this is not a risk that you want to insure 100%. The odds are not in your favor. You have higher odds of needing long-term care insurance than you ever do of claiming on your home and auto insurance, than even being hospitalized. I mean, we insure all these things that we don't have nearly as high of a chance of needing as we do long-term care. So again, kind of to bring it back to the point of it being too expensive, it doesn't have to be. Something is better than nothing. I have plenty of clients that, only plan to use long-term care to cover a portion of those expenses. But again, at least something is better than nothing. So it most certainly doesn't have to be expensive. A lot of people also think that they can't qualify. Like medically, they think they maybe have a pre-existing condition or something that would not allow them to be approved for insurance in this area. And that's also not true as well. There are hundreds of different programs available based on your health situation. And that's kind of where I come in and where I help is I get to know you, I get to know your situation, and then I can show you programs that I believe with the conditions, if you do have any that you have, I can still find some form of coverage that you can get. It is not true that you have no options. I have clients that currently, unfortunately, have cancer, and I'm still able to put them on some sort of a program that gives them at least a little bit of coverage. I would say the only time that you can't qualify or that you seriously do have no options is when you already are needing care. When that event happens and you do need care, then unfortunately it absolutely is too late and there's nothing you can put into place.
Yeah. So
and I think one of the last and biggest misconception that I hear a lot is I can self-insure. And that might be something that applies, a lot of people that have planned and prepared well and have a sizable nest egg, they believe that they can self-insure. A lot of people think this or were once told this by someone. And I'm not going to argue that point. You very well could be able to self-insure. I don't doubt that. I have plenty of clients that have saved and planned well, and they could use that money to self-insure. But I guess what I would ask is, why would you self-insure? This is a risk where you don't want to leave yourself 100% exposed. It's a risk that's too high to self-insure the full cost 100%, even if you can. And if you do have the money to be able to self-insure down the road, then you most certainly have the money to plan ahead so that you do not have to pay dollar for dollar 100% out of your nest egg, because you worked so hard. You worked your whole life building and accumulating your nest egg, not for 100% of that cost to go to pay for care, whether that's at home or in a nursing home. Planning to have all of that money be paid dollar for dollar out of your nest egg is not what you worked your whole life for. But then there's some other things that tie into that too. You can't control when an extended care event will happen. I always joke around with people that if I had a crystal ball, it would make my job a whole lot easier, but we don't. So we don't know when something like this is going to happen. which very well could pose an issue with market timing and liquidity if you're planning to self-insure 100% out of, your portfolio. You don't know when this is going to happen. And like I said, that could pose a problem or some sort of issue with liquidity of funds and timing the market. Again, if you're relying on 100% of your nest egg to be what you're self-insuring with.
Yes.
And then the tax sorry.
No, go ahead.
Okay, I was just going to say the tax implications is a big piece of it too, that a lot of people that tell me they want to self-insure don't think through the tax implications of where they're going to pull money from. And I don't claim to be, and I'm not a CPA or a tax expert, but what I can tell you is that money coming from a long-term care insurance program is 100% not taxable. So again, not relying on 100% of the cost to come from your nest egg could help with potential tax implications that could arise, if you are going to pull money out of a 401k or an IRA, that is going to pose tax implications. So having something where that money is not going to be taxable to help is definitely a reason why, even if you could self-insure, why you may not want to. And then ultimately, it's going to have a lasting impact on your estate. If you self-fund 100% of the cost, you are going to draw down on the funds quickly that are left in your estate. So
let me touch on that a little bit too, because sometimes we use a lot of industry terms. So when we're referring to self-insure, basically saying, hey, instead of transferring the risk to the insurance company, we're going to take that risk on ourselves and pay for it out of our own estate or our own savings, is kind of what Sam's getting into. Now, one of the things as we come back to some of these misconceptions is the fact that I'm limited to just a nursing home with a lot of these policies. Can you kind of clear that up? So if you made a comment that you can customize this or tailor it to the specific person's need. But let's say somebody doesn't want to go into a nursing home at all. That's the absolute last resort. What are the other options that they can do with some of the solutions that you provide for people?
absolutely. There are a lot of other things you can do through a long-term care policy than to just pay for a nursing home. So again, that's part of what I take the time to get to know about what's important to you so that I can show you plans that are available if that's something that you want to plan for. Home health care is a big thing. A lot of people want to stay at home as long as possible. If you want to stay at home and you want to prevent going into a nursing home, long-term care insurance will help you have that freedom and flexibility in where and how you receive your care. There's a statistic that says 4 out of 5 people that have long-term care insurance stay at home for the remainder of their life when they need care, because that long-term care insurance is what allows them to be able to have the money to stay at home and have that care provided at home. So you do have that capability to have home care aside from nursing home, assisted living. And again, just depending, there's tons of options. So I don't want to get too into the weeds of it, but there are cash indemnity programs that are available where the long-term care coverage just pays you cash per month. It's a cash benefit, and you can use that money however you see fit. Once you have a triggering event and you go on claim, they don't dictate how you spend that money or what you use it for. You just have to have that triggering event, and then you receive X amount of dollars per month, and you use that money for what you want. So some people will tell me, my daughter is an RN, or I would want my family members to take care of me. You could essentially use the cash benefit in a cash indemnity program to pay your own family members to take care of you if that's something you wanted to do. But that's something that never used to exist. In older long-term care policies, they used to be a nightmare. You used to only have to go to certain nursing homes. You have to jump through all these hoops to file a claim, to pay for X, Y, and Z. And these cash indemnity programs have been a great solution to that, especially with evolving technology. And that's another point, as I work with people that are a little younger in their 50s and early 60s and are starting to plan for this, I remind them, hey, 20, 30 years from now, we may have technology that we don't have today, like robotic care and things, who knows, technology is advancing so fast. So with a long-term care program that has cash indemnity benefits, no matter what happens in advances in technology, you can know for sure that your insurance is going to pay for those things because it's a cash benefit. So yeah, there's a lot of other ways that you can utilize long-term care aside from just paying for a nursing home.
That's awesome. You actually made a comment that I kind of want to probe a little bit because I think I hear this a lot too, that you use the word triggering event. So a lot of times I'll talk to people and they'll say, you know what, Joe, I kind of looked in long-term care, but I didn't want to deal with it because I basically have to be dead before the benefits will pay out. Can you kind of clarify that, clean that up a little bit, that, that you don't necessarily
Absolutely
have to be on a deathbed to get a benefit?
correct. Yes. So across the board, all different types of long-term care policies have the same triggering event. And what that is your doctor has to say you need help with 2 out of the 6 ADLs, they call them, activities of daily living. So bathing, transferring, toileting, dressing, there's 6 ADLs. And if your doctor says you need help with 2 out of 6 of them for an extended period of time, that is a triggering event. So again, I've had clients in the example Joe brought up earlier, in the winter, they're shoveling outside, they slip, they fall, they break their hip, and they need 9 months, or I'm sorry, like 90 days or 3 months of extended care coverage at home. They need rehabilitative care. And their doctor is able to say, well, yeah, they can't do 2 out of 6 of these activities of daily living on their own for the next 3 months. That would be a triggering event that would allow that policy to be turned on. So that's the main one, is it's just a certified letter from the doctor or a doctor's note saying, hey, for over 90 days, they are going to need some form of help with at least 2 out of the 6 of these ADLs. And then the other triggering event would be any form of cognitive impairment. So any diagnosis of dementia, Alzheimer's, any memory disorder. Even if you could do 6 out of the 6 of the ADLs, a lot of people, when they start to develop memory issues, may leave the stove on, may be a danger to themselves where they can no longer live at home, but they can still, their body, they're okay. They still are able to perform all 6 of those ADLs. So then that would be a different triggering event that would allow that policy to be turned on. So those are the main 2 things.
Let me ask you this,
Go ahead.
Samantha, as you mentioned the cognitive impairment. So let's say I got a scenario where I'm a spouse and my husband's got cognitive impairment and I just need to kind of get out of the house, but I can't leave him alone. Do these things have a solution for that?
Absolutely. Yeah. And that's a big part of, again, even husband and wife that plan to take care of each other. You're going to need respite care. You're going to need to allow some sort of caregiver relief, even if you're going to rely on a spouse or a family member to take care of you. So most certainly would it allow for that, to be able to help supplement that. So it's not 100% on the loved one. Someone could most certainly come in the house and help take care.
Okay. I'm just as full disclosure, I'm a big advocate of insurance. I overinsure because I've seen so many things in my life. So I have literally any possible insurance you could have, I could buy. But if you're not somebody like me that bought long-term care insurance when they're 40, when should you, what's the earliest age somebody should start to look into it for realistically? And then kind of what's the age, it's kind of too late, or is it ever too late?
Yeah, good question. So I would say, as early as you want to start planning, plan. These long-term care policies go all the way down to age 30. So that would, I guess, be the soonest that you could start planning would be age 30. But I think the sweet spot really is between 50 and 60, maybe even late 40s. That's where it's the best time to start planning, between 50 and 60. Now, a lot of clients, a lot of people I work with don't start planning until like 65 when they go on Medicare. It's not too late, but again, the sooner that you plan, the higher benefit to cost ratio you get, the more benefit your premium dollars buy you, the younger you are. So yeah, I highly encourage it younger, but there is really no age that you can't get coverage. You just will not see as high of benefit, right? Your premium dollars, how much you have to pay to get X amount of dollars of benefit, are going to be really high the older that you get. So I would say 75 to 80 is when it's hard sometimes to make it work. Over age 80, you might have not too many options, if not only 1 or 2. So yeah, I don't want to say that there's not a time that you have no options, because really everyone's situation is a little different. I would just say the younger you are, the higher benefit to cost ratio you have. And I would say to at least start to get the ball rolling, get get educated, get some information. You may be surprised with the different ways that you can plan, so that it's something that you don't have to continue to pay for your whole life. I have clients that plan ahead so that by the time they retired, their long-term care policy is paid in full and they don't have to worry about those premiums in retirement. So,
Okay, one other topic before we start to wrap up here that I hear every now and then,
yeah.
Joe, I looked at these policies, I think they're great, but as I talk to all my friends, it seems like these premiums just keep increasing every 3 to 5 years. Can you address that premium increases on some of the policies that have happened in the past?
Yeah, absolutely. So policies, long-term care policies, when they originally were started coming out, were priced too low. Like, actuaries did not do the accurate estimate of, what they needed to charge in premium compared to how much they're going to pay out. And what that means is more and more people are claiming on it that this is a policy that you actually really need. It's not profitable for the insurance companies because it's something you're really going to claim on. So because of how it was priced and how many claims they're actually having to pay out, these premiums just they rise, they continue to go up on some of these older policies. But again, that's why I would urge you to get educated and get information on what's available to you, and not just, a blanket statement of one situation or of how long-term care policies used to be, because there are programs where you can guarantee a fixed premium, where we can completely avoid any potential of rate increases down the road. There are, like I said, lots of different types of long-term care policies. So for my clients that are worried about that, and they don't want to have something that they pay into forever and it continues to go up and up in price, then we just look at different types of programs where we can set it up where there is a fixed premium, and written in that guaranteed insurance contract, that price will never, ever go up. So there are most certainly ways to avoid that.
Yeah, in our last minute, I'll share one little thing that I found in my experience is that somebody that's actually had a loved one go through a long-term care situation where they've been one of the primary caregivers or the person helping out. These conversations are real easy. They protect themselves to no end. But in our last minute here, is there anything that you think the audience should know or that you want to kind of get out there as we wrap up here in our last minute?
Yeah, I would just say, don't, do your due diligence and get educated, because there are many different types of long-term care programs available. Like I mentioned, that can be customized to your situation and what you're looking to accomplish. So just do your due diligence and get educated with a professional, like myself. The most important thing is to at least have a discussion with a professional. I do personally have a CLTC designation in long-term care. I would recommend, if you are going to look into long-term care options, to only work with someone that has that CLTC designation. That is a really important thing to know, that that person is a specialist in the area of long-term care. But I would be happy to answer any questions you might have, or even schedule a consultation call to provide you with education and information on why long-term care insurance is something that's extremely important to have in your insurance portfolio. And I would say too, oftentimes people are not properly insured. I'm seeing this a lot more and more with people, where they have insurance for things that they don't really need at the stage in life that they're now in. Things are changing. You have certain things to cover certain needs depending on the stage of life that you're in. So really being able to reevaluate your situation and make sure the right areas are covered as you move into the future is really important. And the reality is people are living longer and longer. Like I mentioned earlier, advances in technology are incredible and only going to continue to evolve. So it's important to understand the frailties that come with living a long life, so that your financial picture is not disrupted by the cost of care. So like I said, I'm happy to review your situation in order to make sound decisions when it comes to your insurance needs, not only now, but then moving forward throughout the future stages of your life.
Awesome. So I know everybody can email our office to get Sam's contact information. However, Sam, if somebody does want to reach out to you or learn more about you, how should they go about doing that?
Yeah, absolutely. If you want to learn more about me, you can check out our website, www.krsinsbroker.com. That's my website, Key Retirement Solutions. I have a page about me on there and some of the different products and areas we help clients with. But I will give you my direct line too. If you want to call and introduce yourself, you can shoot me a text message, give me a phone call. That way, if you would like to just reach out to me directly, I'm more than happy to tell you more about myself and answer any questions. So that is 224-234-1714. Again, 224-234-1714. Or you can email me. It's kind of a long email. It's my full name. So it's Samantha Katchen. Samantha, just SAMANTHA KATCHEN. And then the @ at KRSINSbroker.com.
Okay. So thanks, Sam, for jumping on the call with us today. That was awesome, and sharing your knowledge. And thanks everybody for joining us. Again, we'll get the replay out as soon as we can and put it on the website, but feel free to call Sam if you need to too. All right, everybody have a good weekend. Thank you so much.
Thank you.